Okay, hello everybody. Welcome to this webinar. Thank you for joining us today. We're going to be talking about data and how it relates to the world of business. Well, first of all, I'm excited to be here with Westfield Business School. Westfield is a place for empowering future-focused leaders throughout cutting-edge business education. I'm really happy to join and be part of this webinar. And well, a little bit about myself. Of course, it's always nice to know who's talking to you. I've been passionate about entrepreneurship, finance, and business since I was a small kid, the story of many. My career has been focused on helping youth and adults across the Americas on internationalization projects and entrepreneurship, advocate about cross-culture and cross-border education, which is exactly what Westfield does. And a bit more personal, I'm passionate about travel, of course. I love cultural exchange, sustainability. It's a very important thing in my life. We live in this planet, we need to take care of it. I'm a father of two teenagers, so that keeps me very busy. I like to exercise, of course, like many people nowadays, keep a healthy balance, and of course, learn to deal with all the technology and data we have around. Why is this topic important? I'm really, just to give you a quick background, I studied entrepreneurship and finance in the US. And when I told my dad I wanted to study entrepreneurship, he said, "What? Do you really study that?" This was back in the 90s. And he said, "Okay, you're going to do that, but you're going to take also finance, double major," which was one of the best decisions. To be honest, I'm more inclined towards, marketing, entrepreneurship, but finance has been an integral part of my career. Without numbers, we don't do anything. And today we're going to talk about that. Okay, so we're talking about entrepreneur, and it's important. Even if this is a webinar on data analysis and how to use it, entrepreneurship is present every day. Okay, so who is an entrepreneur in today's world? Okay, so let's put it in context. First of all, this is a word that many years ago wasn't used that much. It's hard to spell, basically an entrepreneur is anyone who has a vision, who has initiative, a change maker. You can be an entrepreneur and not have your own business. It was always said, of course, entrepreneurs, you have to have your own business. There was this stereotype about being greedy, just wanted to make money. And no, the truth is that entrepreneurs have evolved into an integral part of society. We are leaders, we're empathetic, we believe about the environment. We can be an entrepreneur, that's another term, it's a variation. It's anyone who is set to put change, to foster innovation, and to do, great things in this complicated world. And data is one of the biggest assets that you need to manage as an entrepreneur, as a leader, as an intrapreneur. So that's what we're going to be talking about today. Okay. So now we're going to go into, I would like to give you a big picture. Let's start with the big picture. What is the traditional flow that companies go through? Okay, if we talk about startups, right, which is a very hot topic in today's world. And by the way, if anyone has a question, feel free to raise your hand virtually, write it in the chat. We're here, this is a casual conversation. We're gonna be going through some terms that are gonna feel like a class, but really this is a conversation. Again, it's not a finance class, it's a webinar to let you know how you can use data, what ways you can apply data in your everyday. If you're an entrepreneur, how you can apply it, if you're working at a company, and at the end, how to take decisions based on data. Okay, so going back, what is the traditional journey a company goes through? Okay, first, it's the idea, right? One morning, you wake up and you have this fantastic idea. You want to change the world, you want to do a service, you want to do a product, a tech company. You need to validate that idea, right? So that is your next step. Maybe 100 years ago or 150 years ago, Coca-Cola did not go through that exact process, but it started with an idea, right? So once your idea is validated, then you migrate into what could be the product market fit, right? Who is my market? How am I going to enter this product or service into the market? And we're talking about in very, very general terms. Each company, each startup has their own journey. Just like you as a person, you have your own life journey, companies as well. No company is the same. And then, of course, as your idea enters the market, you start getting your first customers, your first sales, you need to think about scaling. Scaling, scaling, scaling. Schools go through that, stores, um, tech companies, everybody scales, scales, scales. And there's going to be at one point an exit. That doesn't mean closing the business. It doesn't mean you failed. It could be a sale. And if you see many success cases are bought over by big multinational companies, but these multinational companies also went through this process. Okay, so this is why we're calling this webinar From Idea to Exit. Not meaning that exit is the final thing for the company or for you, but it could be if you're an entrepreneur, maybe it's your way out, right? If you're a stakeholder, it's selling your stock to whoever is buying. And even an exit, it could be a sad case where you decide to close, all based on data. Okay, but we're being positive, and here we're imagining positive exits. Okay, so the important thing to understand is that at each stage, data plays a different role, but an essential role. Okay, so data, data, data is the key here. Okay. Mitch, do we have any questions on the chat by any chance, or just let me know? Okay.
Yeah, I told you. And right now we don't have
Okay.
any question.
Okay, great, thank you. Okay, so why is valuation such a big deal? Okay, we hear about this word, valuation. It's such a finance word. It's but why is it such a big deal? And because what your company is worth is how much equity your investors are going to want to invest, or how much equity you're going to have to give out, right? So it's very important to have the right valuation of your company when you're nowadays with tech companies. You have the startup phase, so you need to see how much equity you're willing to give to outside investors. Your market credibility. Numbers are going to say how strong your brand is, and depending on how your brand is, you're going to get investment or an eventual exit. Okay, so and ultimately how attractive your business is. It's evaluation is nowadays so important. It's a concept that has been evolving, I think, in the past 2 decades. It was before not so important. Okay, but nowadays it's key. So here's the key: valuation is just about how much revenue. It's not just about how much revenue you're generating. We always think, oh, I'm making this amount of money. No, it's really about the story your data tells you about growth, right? Maybe you had 2 very profitable years, but your historic data tells you otherwise. Tells you that every 2 years you have a bad year, or that constantly you're having good semesters at the beginning of the year or at the end. So, like in your life, what matters is your story, your historical data. So keep that in mind when you think about valuation. It's not just revenue, it's more the history of your data. And that is why handling data analysis is so important. Okay? Okay. So now we're going to go into a little finance class, and I have my notes here because there are a lot of terms, in finance, we love acronyms. So we're going to be going through a lot of acronyms. Okay, let's talk about the pillars. Okay, this is, like a summary of what, startups need to have in mind, and not only startups, any company, for a high valuation. What do we mean by a high valuation? To get a good price of your company, a good market, good data analysis. Again, it's just how well you're maintaining your data and using it to take important decisions. Okay, so the first pillar is financial modeling. Here we mean building solid data-backed forecasts. Finance is about the past, the present, and the future. Forecasting is so important, and you use data for that. Customer and market insights. This is how well you understand users, and demand. Okay, the better you know your customers, the better you're going to be able to use data to take decisions. And data is what makes you understand your customer trends, how often they buy, when do they buy, why do they take my services. So it's knowing your customer is key. Doesn't matter what industry you're in, you're always going to have a customer, whether it's corporate, B2C, or governments. There's always insights that you need to know about. Strategic decision making via data. Wow, this is, I think, the crucial part. This is using data to guide product pricing and market moves. How you're going to decide what tools do I have to take those decisions? Because yes, data, it's nice and keep track, and there are many ways of keeping track of data. But taking the decision, how do I come about? How do I decide in a way that it's also appealing for investors, for future investors, or current, or for my stakeholders, or even for my own self? Okay, so if everybody's ready, we'll go into those three pillars. Okay, the first pillar, it's financial modeling that investors trust. Remember that business is about trust. If you're a customer, you're trusting the company you're hiring to buy the service or buy the product. So how can investors trust your numbers? You need to use standard equations, standard ratios that are known in the industry. Okay, so for example, okay, revenue forecasting. There are financial models that helps you forecast. You can be conservative, you can be aggressive. It all depends what you're trying to do, but forecasting is a very important part. How do you forecast? With the data you have. Okay, you cannot forecast, and that is a challenge when you start. When you start a business, you don't have your historic data, so you need to use market data in order to forecast your first 3 years, for example. Okay, cost structure, customer acquisition forecast, runaway estimates. All these are so important. And here, if you see in this slide, CAC and LTV, does anyone know what they mean? So, for example, customer acquisition cost. That is, something that is so important to keep in mind. Is the cost of acquiring a new customer, basically. Then you have the LTV, which is also the other part. And this is the customer lifetime value. How much is this customer going to give you in revenue? So these are very important ratios that you need to keep in mind. You need to balance. You need to demonstrate depending on what you're doing. And even sometimes this comes to, you're asking for a loan. You want to go to a bank. You need, to finance an operation. They're going to ask for all these ratios. And how do you do that? Well, Excel, good old Excel. Just to give you a quick anecdote, I went to college in the 90s. Yes, we already had email and we had Microsoft. My sons don't believe me, but we do. We did. And, back then, one big thing in the early 2000s was inputting data in Excel. I actually started in accounts payable at a multinational, and I would get paid to basically copy data. Nowadays, it's very automatic, right? But the concept has not changed. And why? Because, this is how you're going to forecast and get trends. So the concept is the same. It's just that we have more technology and more tools in today's world.
Alfredo,
Okay?
we have
Yes.
a question in the chat. Alejandro,
Okay.
Alejandro asks, how do you calculate CAC and LTV?
Okay, good. Okay, so the customer, let's review it, okay? And this is a little bit finance class. The customer acquisition cost is the total cost of acquiring a customer, okay? Let's keep that in mind. So how much is costing in my operation to get a new customer? So basically, in order to calculate the CAC, you need to add all costs related to acquiring that new customer, okay? Everything that is involved in your sales and marketing operation. And then you're going to divide it by the number of new customers you acquired, okay? So, if it's $100,000, the investment of sales, my sales team, marketing, and I acquired 200 customers, there you have your CAC, okay? So that's one part of the equation. Then you have the lifetime, the customer lifetime value. And this is a very interesting concept. It is basically the total revenue a business will generate from a single customer. Okay, imagine that. Okay, whether you're a subscription-based company, whether you're a store, even if you're an education company, how much will I generate for one customer? And basically, in order to calculate that, you multiply the average purchase value. Okay, so if I have a product that sells between $10 and $20, my average sale value is $15, then the frequency that is bought, if it's monthly, then I guess by 12, if it's a yearly subscription. And then at the end, you need to estimate, you need to add your retention rate. Sorry, I say add, but you're multiplying all this, okay? And that will give you the lifetime value, okay? So you're incorporating the average purchase value, the frequency your product or service is sold, and the retention rate. That is so important, right? I mean, if you have a 50% retention rate, that's not good, or depends on the industry. So once you have those two numbers, you will divide the LTV by the CAC in order to get a ratio. And the ideal ratio is 3:1. And yeah, it works out. I mean, it's a big financial thing, but basically, I love this formula. They're so informative. So basically, if you get more or less a 3:1 ratio, that means you have a healthy customer life. If you're getting less, you need to see what you're doing. If you get it the opposite, things are not doing well. And that is what we're saying. That's what investors are going to look for, because that's what they trust. It's a very standard formula based on your data. Okay? All right. So let's continue. And if you have more questions, please put them on the chat. Okay. So basically, doing all this research, I found that high valuation startups tend to it's customer market insights. Sorry, I was looking at the wrong slide. Okay. Basically, customer, and I think people that are in sales and customer service appreciate this. This is not just understanding who your customer is, but how they behave. But we're not talking about psychologically, or maybe yes, maybe not, but based on data. And there are some questions that probably you need to keep in mind, okay? For example, who are your top 10% customers by LTV with your lifetime value? Okay, what is the characteristics of those 10%? Who are generating the most in your lifetime value for those customers? What journey do they take before buying? And we've talked about this a lot before in in other meetings. The journey, it's so important, and every business has a journey. So how is that journey? And why are we losing clients? Why, if I'm selling a product, they only come once and they don't return? If it's service, if it's food. So those are important insights to keep in mind. Okay. And how do you look at this? What tools do we have? And we have Google Analytics, we have Tableau, we have SQL, surveys, NPC, which, for example, it's the Net Promoter Score. This is it measures how likely your customers are to recommend you. It is a very important measure. So I'm sure you've seen it in surveys, right? It's like, based on the scale of 1 to 10, how likely are you to refer this service to a friend or relative? And that's the NPS, and that is a very important measure and insight that you need to keep in mind, because at the end, businesses are based on referrals and on your name. So of course, this metric helps you analyze that. Okay. Then the other important thing is having raw data, but also using it in real time. I was mentioning how before, 20 years ago, we used to input data manually. Well, that's not the case anymore. You can run daily reports on data depending on your business. But the important thing is that nowadays, the pressure is to act on data promptly. You need to use real time. So it is important to use tools that allow you to get quick data and to make decisions in real time. Okay, so, and this brings us to the third pillar, which is strategic decision making with data. Okay, so it's not just tracking your key performance indicators. Everybody's familiar with KPIs, right? It's so used, but it's how to make better decisions, right? For example, should we expand into a new market? Yes, it's selling in Italy sounds so nice, but is that really feasible? Those data show that I can enter the Italian market depending on my business. So, it's data will help you take those decisions if you use it correctly. There is a case, for example, I don't know if for those that watch series, I'm not so much into that, but of course, House of Cards, I've seen a couple of episodes. But the point here is that House of Cards, all these movies and series cost a lot of money, a lot of production money. So, for example, Netflix started running some data when they got proposed to do House of Cards. And you have, for example, the A/B testing strategy, which is you have two scenarios and you measure them, like a good scenario, a really bad one, and then, you start getting your models. Then they started looking at data that is relevant for the decision. So from what I understand is that there was a British House of Cards that also featured, and they looked at that, and the rate of people were engaging, even if it was in another culture from the US. But now there are some numbers that Americans follow a lot the trends that come out in the UK. They ran numbers on how people engage with Kevin Spacey, the actor, and they were very high, and also on the topic. So they modeled all this data and decided to invest in House of Cards, and it's been one of their most successful series. So here they use data before, so it's using smart data. It's like, how interesting. I would have never thought of looking at data of how often people search Kevin Spacey in Google, how they engage with his movies. So they looked at all these trends and data. So that's why we say that data is what makes you take good strategic decisions. Okay, so next time you watch House of Cards, you know what's behind. Okay, and another case study. I'm not sure if anyone has heard of the Dollar Shave Club. This is a subscription-based product for shaving. I mean, most men shave, worldwide. So of course the market is there, but of course you have to run data on how often they buy products and what do they look for. And yes, we're lazy. We don't like to go into CVS or Walgreens or pharmacies. We want everything handy. With the trend of beers, maybe things went down, but now beers are done and a lot of people are using mustaches. So shaving is always going to be important, and it's also cultural. So basically, what was their success? Basically, they came out with a viral video on YouTube, and they started tracking who was watching this video. And based on that, they started to get real-time information, and they started planning their packages, okay? So they used analytics to see the profile of the people that were watching their YouTube videos. And this is very new because this 15 years ago did not exist, okay? And based on this, they started defining their models, their pricing. Basically, you subscribe, which is great, by the way. If you want a tip, subscription businesses are the best, even if it's a low subscription. Why? Because it's recurring. And this is one thing investors love, when people pay recurring. Of course, you need to look at your exit rate from that your customers are not canceling subscriptions quickly. But even that, they analyzed the trends of how people behaved in buying shaving, and well, basically it's been a success story. Their ACV and LTVs were the ideal ratio. Really good logistics based on data, very low inventory, and they just sort of like the Toyota concept, right? Toyota was the first company and the just in time, right? Automakers used to have stock of many parts, and Toyota was the first one to say, no, we'll bring parts as we roll out the cars. So that was a big change in operations in the 1970s and 80s. It's called just in time. They applied it in a certain way. And well, they got bought over by Unilever for $1 billion. Not bad, right? So this is a clear example of idea to exit. Okay. So basically, key takeaways from this case is strong analytics basically make you very scalable. Okay. Before I go into the next slide, do we have any questions, Mitch?
No, Alfredo, right now we don't have any question.
Okay, I'm happy. That means I'm being extremely clear. Okay, excellent. Okay, so more acronyms, right? So what are the actual numbers investors care about? I mean, because of course there are so many formulas, so many things going on, and here there is not a set rule, right? It's how you present things. So basically, for example, I have a list here of important indicators. When we say indicators, yeah, it could be a formula, it could be data, but at the end, it's all, again, based on data. So for example, you have your monthly or annual recurring revenue, the first one. This is something investors or banks or your managers are gonna wanna take a look at, okay? So this is basically, how much of your revenue, of your sales are from recurring customers, okay? So here's where you define recurring versus new. It's a tough business world. You want both to be really good. You want to have strong recurring and you want to have strong new. But at the end, if we go back to the CAC and the LTVs, what is the gain of having a lot of new customers if your cost of getting them is really high, right? So you want to work on recurring. That's why in education, for example, or in services, hotels, they really battle that the customers come back, right? I mean, a Marriott hotel will constantly be reviewing from the reservations we have how many are repeat customers, not only for the Marriott brand, but for my location. Okay, so that's very important. Okay, so then we have the churn rate, which is the percentage of customers that discontinue services for a specific period. And that is very typical, right? Let's think of a gym, okay? What is the biggest month for enrollment at gyms? Does anyone know? It's the month of January, right after the holidays. That's when gyms make their big bucks. So they need to understand trends because most people sign up in January, they're coming from the holidays, and at the end they'll maybe 2 months after they stop going and they come back before the summer and they stop and they come back. So the point is with the churn rate, you start to understand your cash flow, your data, when to prepare, when to market. So it's a very important thing, especially for recurring services, maybe not so much for products, but more for services. Then we already talked about the CAC and the LTV ratios. Gross margin, which is the basic of finance, it's sales minus cost, basically. It's how much you're selling, how much is my operation, and that is my gross margin. It's not profit. Let's not confuse it. Profit comes later. It's you have your after taxes, after other deductions, but this is your bare, I sold $100 and it cost me 30. My gross margin is 70. So, but then other things will come. Okay. Then the burnout rate and runway, that is mostly for startups. This is a scary, I think it's one of the scariest ratios. The burn rate is basically how fast you're using your cash. Let's remember, it's very specific for startups. They get all these investors, they get millions, but they're also spending millions, right? So basically, the burn rate and the runway is how long it's gonna last. Basically, I mean, I'm burning at this rate, and how long is my cash gonna last? And I think it's scary because when they go into this, they get millions of dollars, but they're burning it at a rate that the runway is estimated to be 13 months, right? So it's a very tricky thing. So this is again mostly for startups in tech, mostly. Okay. And again, why do investors look at this? Because this is what's going to tell them if it's a good investment, if you're a bank, if it's a reliable business. But the point here is you don't have to master all these at once, and you don't have to be an expert, even if you're a business owner. What you need to know is that they are out there, and you need to have the decision making of which indicators to use. Okay. You should know which matters the most at your stage. Depends if you're starting your business, if you're advanced. But most important is how to improve on them. You know, how to make decisions, smart decisions. All right. Okay, so that's about the key performance indicators. Okay, so data, yeah, very nice. We have a lot of data. Wow, it's overwhelming. It even happens to us in our personal lives. You know how much data we have everywhere. So how to take decisions, right? How to manage all these indicators that they're fun to calculate. But what do you do with those indicators? So basically, there are some, again, tools you can use. For example, the balance scorecard. That is something that measures performance, right? You decide what you want to measure. It's mostly used sometimes at the beginning. So the balance scorecard it's an important tool. It's basically as the word says, balance scorecard, which is like a sports term, right? It's like a scorecard where you're keeping track of the performance of different departments, of different flows, of different aspects of your business. Then you have the lean analytics, and this is focuses mainly on one metric that matters at each stage. So let's say you're a startup. What's going to matter? That you're getting new customers, right? You're not going to be worrying about recurring, but then as you grow, you start worrying about keeping your customers. If you're, a mid-sized company, then you're going to use maybe a different metric. So basically, the important thing is to know that from all the formulas and all the indicators, you can use the approach of selecting the most appropriate one, depending on your stage, in order to make decisions. And then you have what it's called the North Star metric. And this one identifies, and with this approach, you basically identify one metric that captures your core value to users. So, if you're a service, which metric will help me understand the value of my brand? Why are people coming back to me? So it's a very important one. It's not an easy one to determine. I think this is the trickiest part because again, it's from all the formulas, from all the indicators, which one to use, and that's where you decide or your team decides or you get advice. So this is where strategy goes. For some, it goes good. For some, not so much. Okay, but these are proven frameworks that are out there in order to take decisions. So basically, it's move from tracking data, keeping collecting, doing ratios, to acting on it, just like Netflix did, just like the Shave Club did. Okay. All right. So we're in a world with every founder is a data founder. We all create data. And when we say founder, please understand that we also mean anyone working at a company, right? I mean, it's like the concept of entrepreneurs and intrapreneurs. You can be an entrepreneur, but working for someone else, being innovative. And same here, right? I mean, when we say founders, is how we handle data. And I think companies nowadays are spending a lot of time as well preparing their teams to manage data, to put in the right place. If you have common drives in your company, for example, how important it is to have your data organized, to have access. It's a battle. It's an ongoing battle for everybody. Even passwords is our data, right? So basically, um, you need to be familiar with tools such as Python. Python is a very common programming language. You'll probably hear a lot of teenagers and young adults talking about it. Tableau, it's a platform that Salesforce came out to basically analyze data. It's such a big thing that a company like Salesforce, which is a CRM, came out with a different platform that helps you track data and analyze it. So this gives you the important. R is another example. So basically, yes, you need to learn how to use these platforms, be familiar. You don't have to be an expert, but you need to sort of have an idea. And then you can hire people that are experts on it, okay?
Alfredo,
Yes,
Juan Camilo asks you, what's the difference between Tableau and art?
okay. Yeah, R is much more specific. R, it's also like a, these are platforms. These are platforms. And again, Tableau is issued by Salesforce, which is a big company, and R is like a competitor. So R, if you want more specific data, more raw, that is the one to use. If you want a more easy platform, Tableau, maybe it's your choice. So here's like shopping for what best suits you. Maybe let's go back to the example of Excel. If you're a little company, start a small business, maybe you can run you don't need a CRM. CRMs are expensive. So I will say Tableau and R are like Excel and an advanced CRM. Okay, great. All right, guys. So takeaways. This is, I guess, the important part of this webinar. Again, data, it's a topic you're going to be seeing, whether you're an entrepreneur, intrapreneur, young, old, we all need to learn how to deal with data. So, okay, today what I would like to invite you is to go deeper, as I wrote it here. Don't just, oh yeah, data, I'm scared of it. It's so overwhelming. No, learn a little. Doesn't matter your function or what you're doing. I invite you to go deeper into learning what's out there, and technology is changing, but data do not change. Data is always there. It's just the way we're analyzing it. The most successful founders don't just follow their instinct, as I wrote here. They validate decisions with insight. If we go back to the beginning of the 1900s, yes, maybe everything was based on gut feelings and, a little bit of having a good nose for businesses. It's still part of life, but now everything is so based on data. Okay, if I want to put I don't know, I was talking with a colleague today that here in Miami, there are a lot of New Yorkers moving to Miami, and there are no good bagel shops. New Yorkers are famous for eating bagels and wanting bagels, but we would need to have more data on that. Like what New Yorkers are moving to Miami. What are their eating habits? Are these typical New Yorkers that don't go for healthy food, or they want healthy food? So maybe we have to do gluten-free bagels, etc. So the point is how important data is. Gut feeling, yeah, it should be a good business, but data will prove me right or will prove me wrong. And data, you need to use the tools we talked about before. So basically, every data is a decision waiting to happen. It's how you use it, how to learn. There's no right formula. But yeah, make sure you get some knowledge depending on the stage you are. But yeah, I think it's just like languages, like English. There's no choice. You need to learn English. You need to learn how to use data. And well, we come to the end of the webinar. And here I have a phrase for you. From idea to exit, the entrepreneurs who win are the ones I'm sorry, let's see here, who turn numbers into knowledge and knowledge into action. And remember, data is knowledge. Okay? So, well, thank you so much. And I don't know if there are any other questions, Mitch, or comments. I would love to hear if anyone wants to give a comment or give us an example of how they're using data in businesses, any experiences with data analysis.